So, Dom, Bitcoin, as you said, it's back in the black after a choppy start to the week. It's recovered above that $88,000 price threshold. And that rebound does offer some relief after Bitcoin's worst week since February, one that slashed more than 30% from last month's record high and wiped out nearly $500 billion in market cap. But even with the recovery we are seeing this morning, the market remains fragile. Spot Bitcoin ETFs, once a driver of inflows, have now seen more than $3.5 billion in redemptions this month, putting November on pace to be the worst since their debut. You've got analysts at Deutsche Bank and RBC saying that this latest bounce may not hold. They point to a broader risk-off mood, investors retreating to the sidelines, and then signs of fatigue after months of relentless bullish momentum. Analysts also warn that these flows are becoming self-reinforcing. So as prices drop, more capital exits, which in turn pressures the price. Citi is estimating that for every $1 billion pulled from the ETFs, Bitcoin falls about 3.4%. But Friday brought hope of stabilization. Bitcoin did resist falling below that key $80,000 level. And we also saw $250 million in net positive flows into the funds, which suggests that some institutional investors are stepping back in to buy the dip. But even with gains today, there are macro forces weighing on sentiment, with Bitcoin behaving less like digital gold and more like a high beta tech stock, closely tracking the NASDAQ 100, which jumped higher this morning, led by a rally in Alphabet. So we're going to have to wait and see if this latest recovery will be enough to bring investors off the sidelines.